Let's bring in Robert Sinche. Perfect day to have on the head of most of strategy at the land of RBS. First of all, everybody's safe in Japan with
as far
RBS?
as we know, everybody's doing well.
Good.
As well as they can.
There's just so many different ways to go here. I want to go to your note. Let's go to your note first, Elian, if we could. Victor, get over there, and we'll bring up the Robert Sinche note if we can. There it is. Yen prospects comparisons to Kobe. We believe there are some important differences in the market forces out there now versus 1995. What's different?
Well, I think a couple things are different. Number one, if you go back to January of 1995, particularly short-term investors were very short of yen. We had a lot of carry trade investors.
Short of yen means they were betting strong yen.
They were short yen. No, they were expecting the yen to weaken.
Higher number.
Right. And so after the Kobe earthquake, actually, if you look at the next month, not much happened. Dollar yen was pretty stable. The real move was from mid-February through April. What was going on then? Number one, it was Japanese fiscal year end. The banks needed to repatriate a lot of foreign assets because the Nikkei topics had been down that year. Second, we kind of forget Barings was declared insolvent in late February of 1995. That was a big risk aversion event. If you're short yen and there's a risk aversion event like Barings, like the Mexican crisis, you cover your trade. As we say in this environment, I think it's been relevant in the last few days, in environments with shocks like this, you don't do necessarily what you want to do. You do what you have to do.
I've been dying to ask you this question. Everybody, it's an exogenous shock. I'm like, yeah, right, radar up. We can be as exogenous outside the model as we want. There's a point where that just falls apart, doesn't it?
Well, yeah, and I think that you know, you don't necessarily get rational decisions being made at times like this. You have investors who have to do certain things, take down risks, reduce their exposures. One interesting aspect, I think, to this from the currency world is that as we've talked to our investors over the last few months and we say, where are your big exposures? The big exposures have been in equities and commodities, some exposure in rates and the rates markets, very little exposure in FX. And I think one thing we've seen in this environment is that the FX response has been relatively muted compared to the kind of moves we've seen in commodities and equities.
Too much information. I was stunned when I brought up this chart. I mean, I'm good at this, and I just had lost track of where the dollar is. 1995, strong. What we need is a strong dollar policy. You are one of the good ones pushing against that. U.S. trade-weighted broad. My, we've gotten weaker recently. I mean, it's really come down. It's a U.S. weak dollar policy. But we're not talking about it, are we?
Well, certainly when you create a huge supply of new dollars in the marketplace, odds are its price is going to go down, and that's certainly what's been going on in the international marketplace. And I think that you know, the Fed on hold, U.S. interest rates being low, and the rest of the world starting to focus on inflation risks and starting to raise rates, that has highlighted some of the divergences now between U.S. and foreign monetary policies, and that's contributed to the weak dollar.
Your colleague in crime, Mansour Muhyiddin, over at UBS, says G7 wouldn't mind a Bank of Japan, a Ministry of Finance intervention. Do you agree? Is this like everybody's in the pool together, right? Oh,
I think this is an environment where a surge in the yen could be a destabilizing event. What you don't want are destabilizing events. And when you think about it from the Bank of Japan's perspective, what are the two things they can do? They can supply abundant liquidity to the banking system, which they're doing, and they can prevent the exchange rate from going higher. Those are their real two policy levers right now. So I would expect that they would intervene. I would think that U.S. and European authorities would actually be fine with them intervening here to try to stabilize market conditions.
Do they wait for their trading morning? What is it? What time is it now? 2 a.m. in Japan? They do it right now?
No, this is a 24-hour. They're all working in concert. So if it's activity required now, as we've switched from London to New York hours, it would be the Federal Reserve acting on behalf of the Bank of Japan.
So there's a real window here into the pro game, the 24-hour window here of the currency markets. Let's look at this chart. No bounce to Aussie yen. We saw the move yesterday. Stronger yen playing down the Asia boom, played through Australia, and boy, not much of a bounce today. What is it Ms. Watanabe? Mrs. Watanabe? There's a cliche
Watanabe.
About Watanabe. I was close. Hey, my Japanese is not as good as John Riding's. What can I say? Okay, I butchered that. I got that wrong. Thank you, Rex. I really appreciate that. How will the Japanese react with all their currency investments to this crisis?
Well, I think that if there's one place where there were some short yen positions out there. It was individual investors in Japan who have been looking for higher yields in a lot of these foreign markets. It's not clear that's the first thing on their minds right now is closing out their position. So that is one area where we have been seeing some demand for yen, and that's probably one of the major forces that's been operating here in the short run. But I think that in general, obviously they're going to be flowing less capital out of Japan. They're going to be focused a lot less on investing internationally. And given that situation, with Japan continuing to run a surplus, unless they're flowing capital back out of Japan, it may come to the Bank of Japan that has to do that.
Right. Earlier this morning, folks, on Bloomberg Surveillance, I spoke with Daniel Yergin. You know him from the book The Prize, from Commanding Heights, and I asked him what effect he thinks the current crisis will have on the institutions of the nation.
This is a tremendous shock to the Japanese system. The Prime Minister has called it the worst disaster since the Second World War. And, if there was one country that was meticulous about nuclear power and how it was managed, it was Japan. I think this will certainly shake the institutions of the country.
Daniel Yergin, I just thought it was great perspective this morning. You're a world traveler. You've got a trip you just canceled, right? To Japan. Part of it, just everything going on. I love that word he used, meticulous. Are they meticulous in their monetary theory? Chairman Bernanke went over there in the early part of the last decade and lectured them on a reflation strategy. Did they get monetary economics right?
I think they're meticulous. I don't think they were particularly innovative in the 1990s, and I think that was part of the problem. But I think the monetary institutions around the world now are a lot more integrated. They understand these processes. They've learned a lot. There's certainly been a lot of reasons to learn things over the last few years. And I think that one thing the central banks have learned, and the Fed had to relearn this after the Lehman crisis, is that when something happens like that, you just flood the system with liquidity. And we didn't do that after Lehman, and of course the dollar soared after that event.
We're talking here, and he goes, we had a 79 handle on yen, down we go, stronger yen. That's quite a bounce. Is that a intervention bounce?
Well, I'd know a lot more if I was in the office on the trading desk, but certainly when you see a kind of bounce like that, it was either intervention or a spoof of intervention, as they like to call it, or it could have been the central bank's checking. What they do is they check markets.
Dumb question. Where do rumors start?
Anybody can start one, and it spreads around marketplaces really quickly. And
Does
certainly
it spread
price action.
By Bloomberg messages like so-and-so said so-and-so?
Well, that certainly contributes to it, yes.
Break exclusive. Sneaky. Okay, chart 4. Let's get back to work here. A constraint against Japan exports. Thank you, Victor, for bringing that up. Trade-weighted yen, up we go. I didn't realize how much yen strengthened on a trade-weighted basis. What does the government want to do here, given this crisis?
Well, there's another currency that looks like that. It's the Swiss franc on a trade-weighted basis. These are currencies that have been the safe havens. Continues to push them up pretty substantially against currencies in the rest of the world, and it begins to wear them down over time. Again, this is a big reason why the Bank of Japan, I think, and other central banks has to be in there to help some stability. The Japanese economy has suffered a shock. The last thing in the world they need to do is lose competitiveness right now. And again, I think if this happens, it'll be a concerted effort, and there won't be too many protests about it.
You'll hear us talk about Euro Swissy as well, folks. This is the number of Swiss francs per euro really in today, 1.3%. Flight to quality everywhere. I think we can assume the Swiss National Bank will be a haven. Will Japan continue their safe haven status?
It looks as though they will in the short run. They continue to run, as we said, a current account and a surplus, and that means that unless capital is moving out of Japan, and there's probably not a lot of people going to move money out of Japan right now, unless there's capital flowing out, the pressure will be upward on the currency. And again, I think that's where we'll see the Bank of Japan appropriately step in and help that reflow out of the country. And basically, that's what intervention is. The Chinese during the financial crisis and the Asian currency crisis helped stabilize their exchange rate. And they claim that was a contributor to global stability. So I think there is a sense in foreign exchange markets now that stability of foreign exchange rates can contribute to stability in other aspects of global trade and global economic activity.
Single best trade right now?
Single best trade right now is we think we're heading toward a point where we want to sell euro dollar. The euro continues to be very strong. We have some agreements last weekend, but we haven't finalized, crossed the T's and dotted the I's. We think there are some problems coming up as we go into the end of the month summits. We saw some of that out of the Finnish president here yesterday. And so we think on our valuation models, euro dollar should be somewhere closer to 137 than 140.
140. Thank you. Generous of you to come in today from scenic Connecticut.
Good to be here.
Thank you. Bob Sinche.